it's Nathan Birch here from B.Invested.com.au group of companies, and I'm here today to talk to you about debt and the fear of debt and overcoming the fear of debt. A lot of people ask me, aren't I scared about debt? And more so at the early days, like when I first started investing in property, people were fearful for my own safety, thinking I'm getting myself into high amounts of debt buying properties. And I don't know, like I don't believe that I was in large amounts of debt. I do have debt still, and I think a lot of successful businesses have debt, and it's how you manage it, how you look at it, and what the debt's for, and what the repercussions of your debt is. And looking at debt, debt can be bad if you go down the road and buy a plasma TV on your MasterCard, or if you go buy one of those things and you go and get a TV for $2,000 and you're paying 20% interest on it. I think that's freaking stupid, and sorry for anyone that's ever done that, but I see that there's a lot of risk associated with that, because you're paying an inflated price for a product that is going to depreciate. And if we look at debt and how you can leverage it, you can leverage yourself into a very, very good financial position with debt, as long as there's factors that are there. And the factors that play in mind are two things that I always talk about with property. Cash flow. If there's a greater cash flow net position after all expenses, you're making money after getting the debt. So if you buy a property for $200,000 worth of loan and you've got $350 per week rent coming in, and it covers all the expenses, and you've got $50 in your pocket to go and, I don't know, buy yourself coffee with, that's fine. You're making money from it. The good cash flow, if it's got strong cash flow, debt's fine. If the asset that you're buying with the debt is going up in value and increasing in value, it's a good debt. If it's going down in value, it's a bad debt. So looking at that, a lot of people fear that debt is bad. As I always say, 3 keys to buying properties: buy below market value. It means that there's a buffer in there in case property goes down in value or whatever. You're minimising risk. You make an equity from day one. You've got a strong cash flow and the property is going up in value. What is the risk associated with the debt? People have a mindset, belief that if you have debt, it's bad, you have to buy something cash. Let me tell you, my family, all hard workers, they all think that debt is bad. When I first started buying property, my mother, she looked out for my safety as a mother would, and said, Nathan, you shouldn't buy properties, blah, 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 because debt, there's too much debt associated with it, you've got to pay it off, etc., etc. If I go back, and now to touch on a family subject of my mother as being an example here, if I go back to when she bought her first property with my father, and my mum and dad bought a property, they got married, and they bought their first house in the Parramatta district of Sydney for $13,500. Let's say that they own that property still today, which they do, 40 years on, whatever. The property is now worth about $550,000. If you were to look at that property and you were to never pay a cent off on the debt, the inflation has made the debt irrelevant, because inflation over the years has brought the price up, wages have gone up, so it's easier to pay back the money, and the cash flow from the property, if you were to rent that property out today, you'd get about $500-600 per week rent for it. And the important thing is if you look at $600 per week rent on that property, that's $30,000 a year, 6 months, and you'd pay out the whole loan. The reason being is that inflation has made the debt irrelevant, and you've got to look at properties when you buy properties and think, okay, how is this debt? Is this a good debt, or am I over leveraging myself by getting a 95% LVR and having a high loan to value ratio, having too much exposure and not enough capital, equity or buffer in your back pocket, and work out whether the property is right for you and whether the debt is good for you to take on. The funny thing is that if my parents were to sell the property, parents sell the property and they get themselves $500,000, $600,000 for the property in today's market, 2013. The funny thing is that the stamp duty taxes payable would be more than what they paid for the property. The new buyer would pay more in stamp duty and taxes than what my parents actually paid for the property brand new 40 years ago. So it's important to understand how debt can help you build a property portfolio, how it can help you build financial independence, and how it can actually get you out of the workforce to be able to live life on your terms. And if we look at any successful business, whether it be a publicly listed company, whether it be a private enterprise, most businesses have debt. Personally, I think debt is okay. I'm not a big fan of debt on businesses. I don't believe in it that much, but some people use it to expand, whether it's a factory and they need to put in some millions of dollars of machinery. If they make a financial decision that's going to benefit them by increasing profits, then it's a good thing to do. From a property investing side of things, you look at property investing as a business, debt is a leverage tool. Personally, you could buy 10 properties, wait for them to double, sell off half, and you've got 5 properties unencumbered that are bringing you a cash flow to replace your income. And it just depends how you view the debt, how you think about the debt, and how the debt is structured. So really important to get the right research done on that, do the right research, get the right people to lend you the money, make sure you buy the right properties, and hopefully you'll have a recipe for a successful property portfolio and make lots of money. So just sort of touch on that today. Appreciate you letting me in your home and watching me on YouTube. I'll talk to you soon.